So, good afternoon. I'm Angela from Commerzbank. I'm working in the product management of trade finance and supply chain finance. And I'm very happy to present a fairly new project in R3 called Marco Polo. And before I start talking about Marco Polo, because not everybody has a trade finance background, I would really like to show you how complex the ecosystem of trade finance is. Ecosystem was a word which was used before this morning, which is very essential. And I can tell you the ecosystem of trade finance is very complex. Why? We have a lot of stakeholders. We have a buyer, we have a seller, we have the banks involved. But we also have forwarders, we have carriers, we have the customs. We have inspection companies, and we have, of course, also government bodies. So you see a lot of stakeholders who are engaged in this trade finance business. But not only that, we do cross-border business, and that means we are acting in different countries, and each country has their own jurisdiction and regulatory framework. And then, on top of that, unfortunately, the compliance requirements are increasing. So that is a real pain, and I think the people who are also in trade finance will agree to that. So we have a lot of challenges. How do we import and export goods nowadays? We have a lot of data which we need to do this, to get goods being shipped from one country to the other. We need to ship goods by plane, by train, by ship, by truck. So what I want to say, we have a lot of data which is needed in trade finance transactions, and this data at the time being is received and it's put on paper documents. And to authenticate this, you sign and stamp the paper document, and then you deliver this paper document to the bank, to another bank, and so it can take really 10 days from the supplier to the buyer to get the documents, because without documents you can't obtain the goods at the port. So these documents also sometimes prove ownership, and this ownership needs to be transferred from the supplier to the buyer. So we have a lot of, challenges we need to cope, and this ecosystem is really the reason why new technology like distributed ledger technology and the Corda platform will provide a lot of potential for the trade finance industry. And also this is the technology we use for Marco Polo. And I'm happy to talk about Marco Polo because this project, maybe different to others, is not due to replace existing instruments and solutions we have in the trade finance and supply chain finance market already. We would like to focus first of all at our corporates. What are our corporates' needs? And there are a lot of needs, to be honest. And what is very special about Marco Polo is that we really would like to look at the supply chains of our corporates. Because we have different supply chains. We have a physical supply chain, we have an information supply chain, and we have a financial supply chain. So we have a lot of supply chains. And the beauty of Marco Polo is, and this is also one of a very important target, is to converge these three supply chains of our corporates and to find out, what are the gaps on these supply chains, and there are gaps. And I'm talking about mitigating risk, I'm talking about financing, and I'm also talking about visibility and speed of transaction. And so the vision of Marco Polo is, first of all, to comply to our corporates' needs. Secondly, to converge the different supply chains we have. And sometimes our corporates have supply chains on both sides because they're not only buyer, they're also seller. And then we would like to grab the data from these supply chains. We want to provide more transparency. We would like to automate. And then we really would like to offer solutions in the area of risk mitigation and financing. And that provides a lot of opportunity. So here we see the different supply chains we have. We have a buyer, we have a seller, and we have different supply chains, and we have different needs. So the big challenge in our project is, and this is essential, to find out the trigger points or the events, and with that connected the data of the physical supply chain, and to provide solutions on the financial supply chain. And first of all, we need to find out what our corporates' needs are, and with this we want to fill the gaps which are present at the time being, and we want to offer solutions along the supply chains. At the time being, we target SMEs and large corporates. And we really would like to offer solutions to open account business. We have in the market increasing transactions. We have an increasing world trade business. And more than 80% are covered by open account business. And this gives a lot of potential. And this is the market we aim for. And we are happy to provide solutions for our corporates with this new technology along the supply chain of our corporates.
Great. We'll go to the next one. Hi, I'm Rob Barnes, and I'm one of the many founders of TradeIX. This is a fair few of us, trust me. So I get a little bit of a billing. Our goal, basically, within Marco Polo is to address the massive market that trade finance actually represents. And again, trade finance to us is, Angela talked a little bit about cross-border, but actually trade finance is not necessarily cross-border either. It's also domestic. So it's really basically the commercial interaction between businesses and their counterparties to buy and sell goods and services. And to do that, if you look at it, at the end of the day, if you look at account receivables that are actually on corporate balance sheets today, there's over $40 trillion. So it's a massive market. I mean, just such as the slides that Nigel put up before, we're dealing with very, very big numbers and very big opportunities. And unfortunately, with very big numbers and very big opportunities, there is a lot of legacy operational cost and inefficiency in actually dealing with this. So our goal with the Marco Polo, as Angela said, is to actually try and get to a point where there's transparency, there is trust, and there's a better way of actually transacting business between companies, whether they be domestic or whether they be cross-border in any country. So to explain where we are with the first stage, as we saw on the earlier slide, we had down the bottom 2 red bars, which was the risk mitigation and financing. The way we're going to look at building this on quarter is we're going to look at the ability for purchase orders to be uploaded, and at any point along the line of the transaction, a bank, a participating bank, may choose to finance. It's really completely up to them. It's their risk appetite. But the point is, we'll know the origin of a purchase order, for example, and I'm just going to go through a basic orchestration here very quickly so I can get to the demo, where a purchase order might be uploaded by a large corporate. And that purchase order could be put onto the application, onto R3 Net eventually. And basically, at the end of the day, that's something that the buyer and the bank knows. As it goes through, the supplier then is actually posting their invoices, and there could be a match between it. The supplier doesn't necessarily know that the bank actually has that purchase order to match. So again, it basically creates a better way of actually creating a less of a risky transaction, and it may be financed at that point. A second point. And then we will actually start to hit the various APIs and work with the logistics providers, such as the DHLs and the DB Schenkers and the Maersks of the world, and we'll start hitting tracking as a very start. Not actually looking at the actual document itself, but we'll get the tracking numbers that are actually put in there, and we'll start hitting it and actually start providing events that will determine what stage is that invoice in. Now, we don't necessarily know that that invoice represents the goods that are being shipped, but again, by looking at historical relationships and everything else, we get a fair assessment, and these are relationships that the banks have today. It's a starting point. This is a journey. Once it gets to that, again, we now have a very, very fundable asset invoice that could be discounted to 99% of the value of the invoice if it's needed to be, right? Because we know that it matched a purchase order under the rules that were actually set up within this system to say that, hey, if this can be multiple shipments against this purchase order and the invoice might be to a certain value, etc. And now we've got a confirmation from DHL or DB Schenker, for example, that it's actually been delivered to the buyer and that they've signed for it. Great. The chances of dilution, the chances of it actually creating an event which is fraudulent is actually very, very de minimis at that point. And then we can go through an orchestration, again, still within the network, of how the supplier can actually fund that invoice by presenting it to one or many banks. It depends on the actual network orchestration, receive a quote, and then sell that actual invoice along the way. What I'm going to show you today is I'm going to show you the orchestration that we built just as a demonstration. It is purely a demonstration, but it's live. It's actually hitting APIs. It's not a HTML mock-up. It really does work. That is going to show you from the point of supplier requesting a quote, receiving a quote back for it, and actually selling their actual invoice to an actual bank. And all of this is actually working with Quarter live, as you'll see. One of the things I do want to talk about, because the user interface I'm going to show you in a few minutes isn't exactly that sexy, so this is where we're going. Just wanted to put that up so that no one sort of criticizes where we are at the moment. So, if I can switch to this computer, I will log in. Okay, I'm just going to log in. I'm going to log in as a demo app. What you saw before is where this is actually going. At this point, I've logged in as a supplier. At this point, I've actually had my invoices approved. They've probably gone through some sort of eligibility. In this case, it's an insurance eligibility that we're showing here, but that could be, for example, the fact that it was a response that we got back from an API hit that we did out to DHL, for example, to know that this invoice associated with that tracking number that was in the invoice was actually delivered. So at this point, I'm just going to go to fund some GBP. I'm going to quickly go through and select what do I do? I select the cell, select Costco. I've logged in, by the way, as Kellogg's, not the meat. And at this point, I can look at exactly what I want to fund. I'm quite happy with this. I'm going to go and request a quote. I'm going to request a quote on all 5. Actually, let me just do it on a couple of invoices, just to be safe. I'm going to request a quote. It's now going to go out, and it's going out to, in this particular orchestration. Now, this could be a one-to-one for the banks that are there. It doesn't have to be one-to-many. It's really up to the bank and what they do and how they want to orchestrate this. In this case, just to show you a little bit more power, it's actually gone out and actually hit 6 funding institutions, right, that are going to come back. We're going to review the pricing that's come back, and this has all happened in real time through hitting APIs onto a core system. The only thing that's different here is that it's actually hit pre-agreed pricing for each of those banks. Now, that doesn't have to be pre-agreed pricing. It could actually be pricing that has actually gone out for somebody to manually look at and actually respond with a bid coming back. So there's all sorts of rules and ways in which this orchestration can be delivered. And again, these rules and everything that we do at every point is actually written onto the ledger, right, at this point. At this point, I'm looking at my best one. It's Bank of Europe, funnily enough. And I'm going to actually accept this. I predict accept, and at this point I've accepted that, and I'll show you exactly what has happened since then. I'm going to log out of this demonstration application, and it is a demo app. I'm going to move back into this, and this is, give me 2 seconds here. I'm just going to go into into the actual admin app. This will be accessed in a different way. Again, all that we're showing you right now is demonstratables. It's not production ready. At this point, I'm going to go and look at exactly what actually happened with that particular offer. If I click on that offer, I can see that I created it as Kellogg's. It went out to the 6 providers. At this point, it was accepted by Bank of Europe, and it went through, and we've just gone as far as a bid accept. This will go all the way through to a payment, showing a trade payment and showing a settlement payment. It will do a number of things going forward if there's multiple payments against an invoice, etc. But at each time that I'm actually hitting this, I'm actually accessing exactly what happened at that point. And at this point, it shows me the block address that it was actually put to, what was offered to that at that point. It can also show me, and this is dummy, this bit is dummy, it's not correct. We can also access what we call the composer rules, and again, IBM stole composer off us, not the other way around, I can assure you. So the composer rules are how we compose the actual rules that we use for the different orchestrations, and this is a way of actually looking at what actually happened and tracking and tracing that actual orchestration all the way through. As I say, as we start to build this out, we'll start to build out the shipping, how the invoice started from a shipping point of view, how the invoice started from a purchase order, where it was matched from the purchase order, how it was consumed against that purchase order, because it might not be a one-to-one situation, it could be a blanket purchase order that invoices come out against, and how that goes all the way through to a payment, a trade payment, and a settlement payment at the same time. If we were to look at what actually happened with the invoice that I actually just traded and actually show you this, this will actually show you what actually happened with this particular invoice. We can see that when it was actually uploaded onto the chain, When it was accepted, at this point here, it became eligible. We actually did through an insurance a validation on this particular orchestration. We then created an offer, as you saw before, and then it went out to all of these institutions to bid. And eventually, we got a bid accept back, and this is the bid accept that was done. And this auditability of every underlying asset that's on here is actually going to be quite powerful, because how that is actually displayed or reported will really help internal compliance against actually what happened. We might also have in the orchestration had a check against the entity, against the back office, to make sure that that entity is still valid within the bank. We might have also done a Thomson Reuters world check at one stage, for example, to look at any sanctions issues that may have occurred at that point. So there's a lot of things we can put into the orchestration as we actually start to move this forward. And again, as I say, all of this that we're doing today is basically built, all of this is built on Corda going forward. And Marco Polo is about how we start at the kernel and how we develop this out so we can create multiple trade orchestrations, whether they be trade orchestrations for supply chain finance, or whether they be receivables, whether they be factoring eventually. It doesn't matter. Basically, any trade orchestration should be able to work on this as we build out over the next 18 months to 2 years. So, I'm on time. Wow, that's a miracle.
Maybe a few words as a summary. I mean, I know you have heard a lot this day, and it's the afternoon, but basically Marco Polo is about converging supply chains. It's about finding gaps our corporates have in the space of risk, liquidity needs, speed, transparency. We would like to avoid fraud, you know, I mean, coming from trade, there are fraudulent documents around, so hopefully with more data, secured data, we can avoid that, so to comply our compliance requirements. And working capital optimization is one of the key solutions we offer as well. So to be honest, there's lots of opportunity, there's lots of potential, especially when we focus on the supply chain, the physical supply chain we have, and they are there, but there's a lot of data around and we need to use it. And I think I'm very happy to have this technology now, because this idea has been in my head for a long time, but now maybe it's time to get it done.
I think also, Angela, with the power of what R3 is doing with testnet, and you know, it's a start for us and how we can actually start to migrate that forward. It provides massive opportunities to create different business networks which each bank can actually run themselves or be involved in, and how that can actually move around between them and interoperate the actual transactions that need to, and particularly entities as well. I think it's going to mitigate fraud to a great extent, and I think it's going to open up transactional on revenue opportunities and really take significant costs out of what is basically a very costly business to run today. Yeah. Thank you.
Thank you.